Welcome back again to Deep Dive Podcast.
Yes.
Today we're diving deep into Alphabet Inc. You know them, you probably use their products daily, but just how deep does this rabbit hole go? We've got a stack of research and news here ready to break down not just what this company does, but the forces shaping its future.
Yeah, it's fascinating how many people still equate Alphabet Inc. with simply Google search.
Right.
Their true scope is so much vaster, extending into some truly unexpected sectors.
Okay, let's unpack that for our listeners.
Yeah.
So where do we even begin with this sprawling tech giant? Help me categorize the beast.
Imagine a three-pronged approach. We've got Google Services, the core that most people interact with daily. Then there's Google Cloud, their enterprise-focused powerhouse. And lastly, we have the other bets, which is where things get really interesting with ventures that sound like they're straight out of science fiction.
All right, so Google Services, this is where the money printer goes brrr, right? We're talking ads, YouTube, Android,
Yeah,
all the stuff that's basically become digital oxygen for many of us.
precisely. It's the digital infrastructure we often take for granted.
Yeah.
Google Search, Android, YouTube, Gmail, Maps. These are the tools billions use every single day. And that kind of user base is advertising gold.
But then you've got Google Cloud, which I feel like flew under the radar for a while, but now it's this behemoth battling it out with Amazon and Microsoft.
It's a fierce battle indeed, but Google Cloud offers something unique, a deep integration with artificial intelligence and machine learning.
Uh-huh.
This isn't just about storage or basic software. It's giving businesses the tools to analyze data in ways they never could before.
So it's like they're not just renting out server space, they're providing the brains to go with it. Okay, I'm officially intrigued by this cloud showdown, but let's not forget about those other bets you mentioned. This is where Alphabet gets to play venture capitalist with its own mega fortune, right?
Exactly. And some of these bets are pretty bold. Take Waymo, their self-driving car company.
Yeah.
They're already operating fully autonomous ride-hailing services in several cities with no human safety driver behind the wheel.
Whoa, no safety driver. That's next level. It makes you wonder, though, is Alphabet playing it safe with their cash cows? Or are these other bets going to be the ones that truly define their future?
That's the million-dollar question, isn't it? But before we get too deep into speculation, let's ground ourselves in some recent news. There are a couple of stories that really highlight the challenges and opportunities Alphabet is facing right now.
All right, hit me with the headlines. What's got the tech world buzzing about Alphabet lately?
Well, first off, there's this antitrust probe launched by the UK's Competition and Markets Authority, the CMA. They're taking a hard look at Apple and Google's dominance in the mobile ecosystem.
Well, this is about more than just iPhones versus Android, right? This is about the whole shebang. App stores, browsers, the whole 9 yards.
You got it. The CMA is particularly concerned about how Google leverages Android's market share to potentially stifle competition. Think about it. If your phone already comes preloaded with Google's apps and services, are you really likely to seek out alternatives?
So it's like they're investigating whether Google is using its size to tilt the playing field in its favor.
Yeah.
And this isn't just a UK thing, right? There's growing global scrutiny on big tech, and Alphabet seems to be right in the crosshairs.
Absolutely. This probe is just one example of the increasing regulatory pressure these companies are facing.
Yeah.
It's a reminder that even giants like Alphabet aren't immune to accountability.
Okay, so antitrust headaches on one hand, but on the other, it sounds like Alphabet is making some strategic moves to stay ahead of the curve.
Right. The second big story is their acquisition of part of HTC's extended reality XR business for a cool $250 million. Now, that might sound like a drop in the bucket for a company like Alphabet.
But it signals a big bet on the future of virtual and augmented reality, doesn't it?
Yes.
This isn't just about building a better VR headset. This is about owning a piece of the metaverse.
Precisely.
Yeah.
And if anyone can weave together the physical and digital worlds in a seamless way, it's probably Google. Think about the data they already have on our locations, our interests, our online habits. They could create truly immersive experiences tailored to each individual user.
Okay, that's both incredibly cool and slightly terrifying at the same time. But before we spiral down that rabbit hole, let's get back to the here and now. How are things looking for Alphabet financially?
Well, in 2023, they pulled in a whopping $307.39 billion in revenue, which is an 8.68% increase from 2022. And their earnings, A cool $73.80 billion. That's a 23.05% jump.
Okay, those are some serious gains, even for a company of Alphabet's size. It
Yeah.
sounds like their core businesses are still firing on all cylinders.
Absolutely. And remember, this growth wasn't limited to just one segment. While advertising revenue from Google services is still the major breadwinner, Google Cloud is rapidly gaining traction too.
So they're essentially playing both offense and defense, dominating the present while investing heavily in the future. And that brings us to their stock performance, which I'm guessing a lot of our listeners are keen to hear about.
As of today, January 23, 2025, Alphabet Inc.'s Class A shares, GOGL, closed at $197.98. Over the past year, we've seen a pretty wide range, hitting a low of $130.67 and a high of $202.29.
So some volatility there, but not out of the ordinary for a tech stock, especially one as closely watched as Alphabet. And let's not forget that sweet, sweet dividend.
They're currently paying out $0.80 per share, which translates to a 0.40% yield. Not huge, but definitely something to consider for long-term investors.
Right, so we've got a solid grasp of Alphabet's current state of play. But what's next for this tech titan? Are they on track for continued dominance, or are storm clouds gathering on the horizon? Let's delve into the forecast and find out.
Let's unpack these forecasts, but first, it's worth noting that predictions, especially in the tech world, are more like educated guesses than crystal balls.
Fair enough. So what are the so-called experts saying about Alphabet's future prospects? Should investors be bullish or bearish?
Well, the overall sentiment among analysts seems to be cautiously optimistic.
Okay.
Based on the forecasts from 41 analysts, the average 12-month price target for Alphabet Inc. stock is $209.68.
So a potential increase of 5.91% from the current price. Not exactly a moonshot, but respectable growth considering their size.
Right. It's not about explosive growth at this point. It's about sustainable expansion. And that's reflected in the consensus rating, which is a strong buy. This suggests that analysts believe Alphabet is well-positioned to weather any potential storms and continue delivering value to shareholders.
But let's be real, those storms could be pretty intense, right?
Yeah.
We've already talked about the antitrust scrutiny they're facing, and there's always the threat of new competitors emerging in these fast-moving tech sectors.
Absolutely. And we haven't even touched on the potential impact of economic downturns or shifts in consumer behavior. Those external factors can be hard to predict, but they can definitely shake things up.
So a lot of moving parts, a lot of unknowns. But what about the long-term projections for Alphabet's revenue and earnings growth? Are they expected to keep chugging along, or are we looking at a slowdown?
Analysts are forecasting continued growth for Alphabet Inc. over the next few years, but the pace is expected to moderate somewhat. Revenue is projected to reach $360.68 billion in 2024 and climb to $402.92 billion in 2025.
So still impressive growth, but not quite the double-digit jumps we've seen in the past. What about earnings per share?
EPS is also projected to increase, though, again, at a slightly slower rate. The current forecast for 2024 is $8.25, which would be a jump from the $5.80 reported in 2023. Looking further ahead to 2025, the projected EPS is $9.23.
Okay, so the story seems to be continued growth, but brace yourself for potential turbulence. I guess that's the reality for any company operating at Alphabet's scale. But let's zoom out a bit and think about the bigger picture. What are the key takeaways from all of this for our listener?
Well, I think the first takeaway is that Alphabet Inc. is more than just a search engine. It's a multifaceted tech behemoth with its tentacles in everything from cloud computing to artificial intelligence to self-driving cars.
And those ventures outside their core businesses, those other bets, they're not just side projects. They could very well become the engines of Alphabet's future growth.
Exactly. Think about the potential of Waymo, their self-driving car unit. If autonomous vehicles become mainstream, that could be a game changer, not just for Alphabet, but for the entire transportation industry.
It's like they're playing a high-stakes game of chess-making strategic moves to anticipate the future of technology. But with great power comes great responsibility, right? That's where those regulatory challenges come into play.
The antitrust probe in the UK is a reminder that Alphabet's dominance is being closely scrutinized. Governments around the world are grappling with how to regulate these tech giants, and the outcome of those debates could have a significant impact on Alphabet's future.
It's a delicate balancing act. They need to innovate and expand while also addressing concerns about their market power and potential anti-competitive practices. And then there's the human factor. How will consumers respond to these new technologies, and what ethical considerations will arise as Alphabet ventures deeper into areas like artificial intelligence and virtual reality?
Those are questions that will continue to be debated for years to come. But one thing's for sure, Alphabet Inc. is a company that's constantly pushing the boundaries of what's possible.
All right, so to wrap things up for our listener, what's the one key insight they should walk away with from this deep dive into Alphabet Inc.?
I'd say this. Don't underestimate the power of long-term thinking and strategic diversification. Alphabet Inc. didn't become a tech titan by resting on its laurels. They've consistently invested in new ideas, explored emerging markets, and acquired companies that complement their core strengths. That's a lesson any business, big or small, can learn from.
Great insight. And on that note, I want to thank you, our expert, for guiding us through this fascinating exploration of Alphabet Inc.
It's been my pleasure.
And to our listener, we hope this deep dive has provided you with valuable insights and a renewed appreciation for the complexities of the tech industry. Remember, the world of technology is constantly evolving, and companies like Alphabet Inc. are at the forefront of that change. So stay curious, stay informed, and stay tuned for more deep dives into the companies and trends shaping our future. Thank you all again for tuning in. Remember to like and subscribe